the last few days, we've gotten a series of notes which speak about how the absorption in key markets like Mumbai and Bangalore has been really well. Inventory for residential housing is on the decline as well. That's what real estate consultant Anarok had to say. Now, partly because developers have reduced the prices too, adds the report. Joining us now to give us a builder's perspective is the Vice Chairman and Managing Director of Sobha, Mr. J.C. Sharma. Remember, they have significant momentum on new launches. Reports say that over the next 2 or 3 quarters, there'll be 5 to 7 new launches. So lots to talk about with them. Mr. Sharma, thanks so much for taking the time out and speaking with us at Bloomberg Quint. This is Neeraj here. Good morning. How is the scene looking like? Have companies in Bangalore, which you would be completely aware of, and maybe Mumbai as well, if you have some thoughts there, been able to sell a lot more than earlier in the first couple of months of this calendar? And if so, what are the reasons thereof? Is there demand uptick, or is there demand coming in at a particular price which is lower than the threshold?
See, whatever little bit we have understood about this market, we believe that demand is still not that great. What is happening parallelly as well, that new launches in last 4 to 6 quarters, they have been almost next to nothing. And because of the lots of initiatives which this government has taken by way of reducing not only the interest rates, but announcing this PMAY scheme and allowing them to raise money through their provident fund and others, we are getting new set of buyers who are getting some kind of a value for money proposition throughout India. And these are the buyers who are somehow ensuring that the current stocks which is available is being taken by them. But still, net in my view, the overall demand for the financial year 17-18 should be lower than 16-17, which also included 1 quarter of the demonetized that period. But due to the declining inventory and the new lower launches, in my view, next 2 to 3 quarters, things should become much favorable in the developer's point of view. And that is where I think not only the prices will start rising, the volumes also should start picking up. Bangalore has always been a customer-driven market, and it will continue to do better than most of the other markets in India. That's my perspective.
So you have not seen a significant rise in absorption in residential units in Bangalore in the first 2 months of 2018?
Yes. As far as we are concerned, we believe that we will continue to do better than what we have been doing on a quarter-on-quarter basis. This quarter, the first 2 months performance gives us confidence that we are on track in achieving better performance than what we have achieved Y-on-Y also and quarter-on-quarter also. But that apart, when we talk about the macro market, what I am trying to say is this: the demand still remains subdued. Probably we are doing better and gaining market share at the cost of other players.
But which would be a natural fallout of all that has happened, right, Mr. Sharma? I mean, if at all RERA would have led to large established quality players gaining market share at the expense of others.
Yes, I do agree, and that is what it was supposed to have panned out, and exactly in that copybook style it is happening now, where the established players with clear track record and with good pricing and good availability of inventory in all product range, they are relatively doing better now than the most of the market players.
You're saying that the market as a whole has not really seen this. This is probably happening at the expense of others. It's not that everybody in the market or the market at large has seen rising sales in the first 2 months of 2018.
I do agree with you.
Okay.
That is what we are seeing right now.
Okay.
Prima facie, the market is still not recovering.
Okay. What about business confidence and new launches? I was reading a note post your third quarter numbers, where you did fairly well. There's talk of how you'll have 5 or 7 new launches. I believe in this quarter you had a launch which you probably have already done or will be doing in Chennai as well. Can you give us some color here?
Why not? What we are anticipating as things stand today, because of the RERA and because of somewhere the liquidity crisis the developers fraternity is now facing, we are gearing ourselves to launch more number of projects in the coming quarters than we have ever done. We see somewhere a mismatch in the supply, because the ability to deliver or ability to launch new projects is greatly diminished in this emerging scenario, where we believe that not only the demand is likely to recover with the economy reviving, at the same time the volumes also should start recovering. And anticipating that kind of a scenario, Sobha in its main market, that is Bangalore, is planning to launch almost every quarter 1 or 2 projects, and the same thing is going to get replicated in its other large markets. In Chennai, last month we have launched one villa project, and one large multi-story building group housing scheme also will be launched there. In Kerala also couple of projects are being launched in the coming 2 quarters.
These are not affordable housing projects. I mean, a villa project would definitely not be affordable, but I'm guessing a multi-housing project that you're talking about will also not necessarily be affordable housing, right? But and somehow the commentary, Mr. Sharma, that comes through everybody is that affordable housing is the place to be in.
We are also going to be there. It takes its own time. One of our project in Bangalore, where we have already got the preliminary approval from the Bangalore Development Authority, where almost 1800 units will be launched in this financial year itself. No, not this 17-18, I am talking about the coming maybe next 3 to 6 months time, where almost 1800 units are going to get launched. There are 2 or 3 more such projects which are being planned, which will be purely affordable. We strongly believe that affordable is the future, because the compact homes will be giving some kind of a price benefit to the would-be buyers, at the same time will be giving us the required income tax benefits, and that benefits can be passed on to the consumers, and that way we believe that the future belongs to 60 meter square carpet area affordable homes in most of the markets.
But the launches that you've planned as of now, except for that one affordable housing launch, are not in the affordable housing space, which means that you're confident about the non-affordable housing pocket also to start seeing demand traction. Am I right?
You are absolutely right. See, we have been selling, generally speaking, the luxury homes with the 1700 square feet as sellable area for last 10-12 years. To migrate that to 1000 square feet sellable area and 60 meter square carpet area, it takes its own time. What we are talking about, in 2 to 3 years from now, most of the developers will have a portfolio which will be almost 50% of the affordable housing. As far as we are also concerned, there are 3 or 4 projects which are at the drawing board, which will be affordable homes in all the cities where currently we are operating. So we are quite bullish, but we will be launching these projects in phases to complement our existing inventory. We still continue to sell value-wise 75% of our projects which are in a price range of more than 1 crore. So that market continues to expand. We cannot write it off. What I am trying to say, if we have to get from 3 million square feet per annum new sales to 6 to 7 million square feet in next 3 to 4 years time, we have to embrace these affordable homes, and that is what we are advocating for our company, and we believe that most of the developers will be following it, and both can coexist.
Okay. Good to know that, Mr. Sharma. Wish you all the best for this current calendar and hope FY19 turns out to be even better than what you just counted out right now. Thanks for joining in today and speaking to us at Bloomberg Quint.